Welcome to High Rock Capital Private Client Services. My name is Scott Tomlinson, and I am one of the two managing partners at High Rock. I'm going to walk you through an introduction to High Rock and a few of the key concepts behind what we do for our private clients. High Rock was founded by our other managing partner, Paul Tepsich, in 2010 to manage about $200 million in closed-end funds for Scotiabank. High Rock is registered with the Ontario Securities Commission. I joined Paul in April of this year to help build our private client business, and we are 100% employee-owned. We're excited to have our unique business model already making an impact. All of our new clients are coming to us because they really like our patient, no-nonsense approach to low-cost investing and wealth management. Our private client division was established to take advantage of some of the synergies that come with the funds we manage for Scotiabank. We are not brokers, we are not investment advisors or financial advisors. We are a portfolio management company who has a clear understanding of wealth management. Importantly, all of us at High Rock have our money invested in the same models as all of our clients. Whatever we do for all of us. Our interests are aligned with yours. Our fees are simple and transparent, and we fully disclose any hidden or embedded fees, and that is something that may not be the case with most advisors. As we have come through a cycle of above-average portfolio returns over the last 6 years, we expect that we are now entering into a period of below-average returns that will likely bring us back to the average. In this case, it's really important to pay attention to the costs of investing. One of the reasons we are attracting new clients is our desire to keep your costs low. We also take our responsibility to you beyond what is required by the regulators. So we have an independent review committee that reports directly back to our clients to ensure them that we are fulfilling our obligations to them, as we have stated that we would. This report is sent with your quarterly update and portfolio progress reports. Well, fees truly do matter, and if you look at the impact of fees over time, it can be astounding. And more importantly, you need to ask yourself, what are you paying for? At High Rock, you get a wealth forecast by our certified financial planner, disciplined, active, tactical portfolio management, which you may not get with many advisors. We also have my daily blog and our weekly webinar to keep you current on our thinking. We send quarterly reports, and you get as much interaction with the portfolio managers as you wish to have. And very few fund managers, if any, will talk directly to clients. When markets get volatile, we want to be in touch with all of our clients individually to let them know that their portfolios are going to be okay. And that's because we care. And we really do care. And that is why we are in this business, to look after you. That is what you are paying us for. And importantly, we actually enjoy looking after you. Well, it's easy for an investment advisor or portfolio manager to get you fully invested after you sign up with them. They'll sell the securities that you had and put you into investments that they want you to have. And they do it immediately at whatever prices are available at that moment in time. That is easy work for the advisor. It is a great deal more work to pick the right purchase points. Sometimes it may require patience and some explanation. In fact, some assets may take months and even years to get into a portfolio. As a result, risk management becomes very important because we must be vigilant not to put our clients' money at greater risk in order to chase higher returns in the short term, but take a long-term view to make sure that clients get invested at the appropriate moment. Part of the discipline that we bring to the table is in picking the appropriate prices and the appropriate price points for buying new assets. This is part of the value that High Rock adds to our client portfolio. Now, recently, our patience and risk management over the last half of the year paid off for our clients, as we're able to get some excellent prices for assets that we have been waiting for. There are many risks that we have to focus on an ongoing basis. The goal in managing all of these risks is to reduce overall volatility in our portfolios. In the recent bout of equity market volatility, where some indices fell by between 10 and 15%, our models combined were down between 1 and 3%, depending on the structure of a personalized client strategy. Our ongoing efforts for the management of your portfolio strategy is to find the best possible returns while simultaneously providing the least amount of risk in doing so. Naturally, this is done in the context of each of our clients' specific goals and their tolerance for risk as we determine in your personal wealth forecast. Our research shows that a globally diversified and balanced 60% equity, 40% fixed income model can significantly reduce risk and still achieve an annualized return of between 7 and 8% over a multiple year period. This is what we consider to be the optimal portfolio. Rebalancing on a regular basis is crucial because different asset classes will outperform or underperform at different times in a market cycle. Selling outperforming assets and buying underperforming assets will continually add value and return. Underperforming assets will eventually return to better performance, and at the same time, outperforming assets will ultimately underperform. This is how profitability is realized and new cash gets reinvested. Our discipline is our strict adherence to your goals-oriented investing. Our structured models, protecting your capital, regular rebalancing, in-depth research, fiduciary responsibility, and a very high level of client service. At High Rock, we have 3 models with which we can create balance and diversification. Fixed income model with government and investment-grade corporate bonds. A small percentage may be high-yield corporate bonds, and we may also include a selection of preferred shares here as well. We have a global equity portfolio that focuses on diversification across thousands of companies in multiple economic sectors and across many geographic locations. As well, we have a model that focuses on Canadian small to mid-sized companies with which we have a great deal of familiarity and deep levels of research. This is an active or tactical model intended to obtain better than average growth. For our clients, we use these models to create portfolio strategies that are in keeping with your desired goals. If you'd like to learn more about High Rock Private Client and discuss any of this in more detail, please feel free to contact any of us by phone or email using this contact information. Well, thanks for taking the time to listen in, and I hope that we hear from you soon.